Oh, hi. Investing in apartments is simple. You collect the rents, you put all that money in a big duffel bag, you fly over to Geneva, and you deposit the money in a nice, secure private bank like this one here. But not really. You've got a lot of operating costs, and basically we found that investors over the last couple of years have underestimated what their operating costs are going to be by a little bit. That's more the case in smaller properties than larger properties. But when you look at operating costs plus capital expenses, we found a bigger difference. So we looked at actual operating costs last year for properties that sold in 2011. The reason we picked properties that sold is so we would have a budget of what people were expecting. And we found that operating costs were actually 5% higher than what they budgeted. Probably most of that can be explained just by the time factor, a budget in 2011 versus actual costs in 2012. But we did find that smaller property investors were off in their budgets even more, and large property investors were pretty much bang on. But when you add in capital expenses, the numbers get a little dicier. Investors budgeted about 13% less than it actually cost for operating and capital expenses last year. The point is, you can't escape capital expenses, and so it's really important to get a good handle on them. A lot of investors budget $200, $300, maybe $400 a unit a year for capital expenses. In reality, they're a lot higher than that. If we look at just the average capital expense investors have spent each year in our region since 2000, you can see here that it's been generally a growing trend, and it's averaged about $750 a unit a year. Now, you can make the argument that you're going to have some significant capital expenses in some years, but in other years you won't have any. That's probably true some of the time, but it's not true all the time. We looked at about 80 properties, same properties every year since 2002, and we found that they had pretty significant capital expenses every year. And you can see that the trend in capital expenses has been growing over the years, and you can project it out that it would continue to grow over the next couple of years. Now, there's a few reasons for these capital expenses. Stuff wears out and has to be replaced. The other reason why these expenses are growing, in addition to just normal cost increases on the stuff that you buy, is that more and more investors have been doing significant renovation to their properties using much more upscale components that cost more money. And so over time, they've just set the bar higher for themselves. And when they do have to replace those items, it just is going to cost more money. Hopefully that will translate into more rent. And we talked about that in another weekly video a few months ago. And there'll be a link to that in the article on our website. The other thing that investors look at, they say, well, I just bought a pretty new property, so it shouldn't have any capital expenses. And this chart shows that basically it doesn't matter how new or old your property is, none of them are immune to the need for some capital expenses most of the time. Even new properties had capital expenses of over $200 a unit a year. That's properties built sort of between 2005 and 2010. You see lower capital expenses in the 1930s. That's basically because these are extremely small units. But the bottom line is capital expenses are significant. Investors do tend to underestimate how much they're going to be. And so they're maybe overestimating how much they're going to be able to stuff in that duffel bag and take to this bank in Geneva. So you can find more information in the article associated with this video. The article is called "You Can't Take It All to Geneva" on our website at www.duprescott.com. I hope that you enjoyed this weekly apartment update, and you'll come back next week for another update.